Ladies and gentlemen, this is Vishal from Equity Guru, and I'm recording this on Juneteenth, so the stock markets and the bond markets are closed. However, there's one market that's open, not much action right now, but we're going to talk about something, I guess, a little bit more positive. We've all been focused on this inflation data, right? 8.5%, the whole idea of peak inflation, that whole narrative sort of becoming the new transitory inflation. But we all know that central banks, specifically the Federal Reserve in this case, are raising rates to try to tame inflation, right? And there was a big 75 basis point hike, the largest hike since 1994, as we saw May inflation come out higher than expected at 8.5% here. And the idea of peak inflation is going to start, I guess, building up and gaining strength when we see the next inflation data start to decline. And, one's not going to do it. I think, we have to see at least a few consecutive inflation data prints coming up lower than previously. And then we can sort of talk about this whole idea of peak inflation and inflation coming back down to 2%. I know in the past, I've spoken about this non-monetary inflation due to supply chains and, war, et cetera, versus the monetary inflation side of things, which is, printing money, and there's more money now chasing a limited number of goods and services. This video, is going to focus more on the non-monetary inflation side of things and potential of one chart indicating that maybe we are indeed going to see some peak inflation. And that chart, folks, is the chart of oil. And a lot of traders have talked about this chart saying, hey, the Fed has hiked rates multiple times, but oil just does not drop. And of course, oil is a big, point with inflation where we see transportation costs increase, also transportation costs for food, et cetera, which means higher costs at the grocery store. So as they say, oil is the lifeblood of the economy. And that lifeblood of the economy is very expensive right now, as I'm sure a lot of you people can tell by going to the pumps. However, on Friday, on June 17th, we had a big drop in oil, a big 6% decline in oil. And that has taken out the support zone that I've been watching at around the 114.25 zone. You can still see we have an uptrend that I'm still watching. So obviously we can maybe bounce back above and break out again. However, I'm hoping we see something like this. And I think a lot of the market hopes that we see something like this as well. Big level, of course, is the big psychological $100 level. However, if we can break below that in 96, I think there might be a good case of peak inflation, right? The inflation numbers will come out lower than previously thought, and that could change what the Fed's going to do, right? Maybe they're going to say, okay, we've said in previous meetings we're going to play this meeting by meeting. We might hike 75 points, 50 points, bring it down to 25 if we see inflation is beginning to taper. So this breakdown, I think, is huge. It has a lot of potential. Let's not forget that OPEC Plus, right? The Saudis and, I guess Russia's part of it. But OPEC Plus did say that they are also going to increase production, right? They're going to increase production, try to flood the market with more supply in an attempt to bring down prices. And that begins in summer, in the months of July and August. So we're almost there. And that could also have a huge ramification of what's going to happen to the price of oil. Let's look at the demand side of things. If things are slowing down, if things are going into a recession, we're going to have more supply compared to demand, and that could help bring the prices of oil down. So very important chart. I said good news, but there are two little outliers that I am watching, which could be, I guess you could say, I don't really want to call it a black swan, but let's say it would cause the oil prices the oil market to maybe reprice and recalibrate all this fundamental news. And the first one, of course, is China. We are seeing more lockdowns in China. Now it's Shenzhen. So we're seeing certain cities go under lockdown. And of course, we saw sort of what happened when all of China went into a lockdown back in 2020 and what happened to oil prices. So the oil prices still move a lot, when China either reopens or closes. And in the future, if China says, hey, we're fully reopened now, right? There's no more of these small lockdowns here and there. That would be, I guess, a positive sign for oil because now you have much more demand rise. And then we have to sort of compare that demand relative to the increase of supply that OPEC Plus is going to do. One news that a lot of other people are talking about, and we all know that with the whole Ukraine issue, what happened to oil prices, and Russia's this big energy behemoth. If something happens in Europe, involving Russia again, maybe that as a geopolitical news could drastically shift the price of oil. And over on Friday, we had news that the Lithuanians, after decades of this agreement with Russia, essentially said that they're shutting off a transit of some goods to the Russian enclave of Kaliningrad here. So, there's a train from Russia, from Belarus, goes through Lithuania, which delivers supplies to Kaliningrad because this part of Russia is not actually connected to the mainland of Russia. And this is where Russia's Baltic fleet is also located. So Lithuania has now come out banning some goods through this territory, which includes coal, metals, construction materials, and advanced technologies, which account for around 50% of all goods that Kaliningrad imports. So apparently now the goods are coming in through ferry, but you can see it's quite the trip to do so. So a lot of people are saying, could this be sort of a major geopolitical news which could stir tensions in Europe once again, with Russia not having access to Kaliningrad there? And you can see Zero Hedge is saying that the Russians consider this an open hostility, a blockade. There's already some panic buying occurring in Kaliningrad because they might not be able to get enough resources. And this line here, that Russia reserves the right to take actions to protect its national interests. So, anything that happens with Russia generally impacts the prices of oil, and we've seen that. So this could be another reason why inflation might not be peak inflation, right? If we see the prices of oil rise because of that news, obviously it changes and it would worsen the inflation on the non-monetary side of things. So I wanted to give you guys some hope that maybe, we are at that case for peak inflation, that OPEC news with demand of supply increasing. Major technical breakdown here. However, there's still more room to go, right? I would love to see a retest of that 114.25 zone before we sell off. But there is a chance that we could be seeing oil prices drop, and maybe dramatically, right? We'll have to wait and see. But two things to keep in mind: that China news and potentially what's happening here with Kaliningrad and Russia. If these events occur, that would, I think, shock the oil market. So I want to leave you guys with that, a bit of a shorter video than before, but some hope that there could be some peak inflation. And that chart to watch is the chart on US oil here. So I'm going to leave you guys there. Let me know in the comments below if you believe that we are going to see peak inflation, or do you think inflation numbers are going to continue to worsen as we go throughout summer? I really want to hear your thoughts below, and I'll catch you guys all in the next video.